Hello everyone, let's have a look at the market snapshot for today. The Indian markets have been doing really good. I think this was 7th or 8th straight session wherein the advances were higher than the declines. We almost touched around 300 for the advances and just less than 200 for the declines. So very good going there. Leadership, I think this is the second session wherein we have touched cross 20. The new highs made in the stock for S&P 500 were around 22 against 478 for the new lows. Just early days for the uh, bullish runway. That is what I feel. But the good part is new highs have also started kicking in. So good going there too for the Indian markets. Indian breadth, the strongest point why I like this particular rise is because of the breadth. Just look at the numbers above 20 EMA, almost touching 400 today. Above 50 EMA, just 350 or so. Above 200 EMA, 280 odd. So I would want you to compare this breadth with the US breadth. See, the best breadth would be wherein these numbers above 20. The our graph looks like this. Above 20 EMA we get the highest number of stocks. Above 50 EMA we get the maybe middle number of stocks, and above 200 EMA just around the lowest. This basically means is new rallies, new highs are getting formed in the market. On the contrary, if when we will look at the US markets, you will observe there the highest number of stocks are trading above 200 EMA. So what does basically this means? This basically for the Indian market suggest the trend is new. It is a very new trend which is taking place, and that is the reason a lot of uh, stocks are getting over 20 MA. Whereas in case of US, what is happening? It is just suggesting that a lot of stocks have already fallen from their 20 EMA and 50 EMA, and they are running towards 200 EMA. Getting it? That means that it suggests that is a mature trend, but then we'll have to wait and watch, if at all that can persist. Let's move ahead. Looking at the charts look very strong. This is Nifty 50. This is exactly I would have wanted this chart to look like, that it hovers around these levels. If at all it would have just run away, I mean, honestly, that would have been little worrisome, at least to me, but I'm just liking the structure of the chart. Nifty 50 is still not the strongest, but very good chart. That is what I would suggest. Nifty 500, very strong chart, very good numbers on the participation, breadth, and the chart looks excellent. This is like a 5 chart. Trend, no surprises. The built up is good. The chart has to look good. The trend has to look good. Nifty 50 bullish, trading above 50 MA. Participation is mixed. Breadth is strong. Nifty 500 bullish, trading above 50 MA. Participation is strong. Breadth strong. Very good numbers. The breadth is as strong as almost touching 80%. You can literally go all bullish for the Nifty 500, Nifty IPO, Nifty small cap 250. These indexes are looking very good at this point of time. US participation, again highly volatile. Advances just below 300, declines just over 200. Pretty much evening out there. If you see, new leadership obviously not getting formed. They were below 10 against 490 plus for the new lows. Breadth, this is what I was talking about. You see, I mean, here what is happening, we have got the max number of stocks above 200 EMA. So yeah, like what we on a literature front, what we study above 200 AMA, that means bullish territory, all the institutions are interesting. That is correct. But then in this market, what is happening? A lot of them have fallen from these. That is what at least the current data is suggesting us. Let's look at the numbers. Above 20 MA, almost 230 to 40 stocks. Above 50 MA, almost 270 to 80 stocks. Above 200 MA, almost touching 300 stocks. The chart looks very strong. No complaints there. I mean, very strong chart. Sorry, this was Nasdaq 100. This is S&P 500. Again, a very strong chart. This is Russell 2000. Very strong chart. The only thing which I'm not liking about the US market is the charts are making higher highs. They're respecting, the trend strength, the EMAs, but this is what I don't like. If you look at the numbers here, Nasdaq looks bullish, trading above 50 EMA. Participation is strong, the breadth is weak. When the breadth is weak, that simply suggests uh, the rise does not have fuel, and that is the reason I'll be very cautious about the Nasdaq 100. S&P 500, it is bullish, trading above 50 EMA. Participation mixed, breadth mixed. The only outcome here is it is stronger than Nasdaq 100, but obviously the moment you see volatility in participation and breadth, the thing is you need to get cautious, and I'm cautious here too. Russell 2000 bullish, trading above 50 EMA. Participation is strong, breadth mixed. Same story. uh, it has become volatile. That is what I would suggest. If you're like, if at all I would want to take certain bets, I think for now I would want to be in S&P 500, because the chart just looks better, but honestly I'll just avoid. I mean, I still have some ongoing positions which I have not cut because I'm just following my trailing stop losses, but I'm not making any new positions in the US market. The macro, no pictures have changed here, and it doesn't change as very often here. I mean, US 10-year yields are still rising. uh, Dollar is rising. VIX is neutral at around 17. BTC is bearish. Gold is bearish. All the more reasons for me to remain little cautious about the US markets, because these indicators are not pointing towards a very healthy new rise for the US markets. So the scoreboard takeaway for me would be, I'll be very very bullish. In fact, I'm all in it for the Indian markets. That is the most strongest. US is mixed, but I'm very cautious. I'm not even taking new bets. Macro looks neutral. My market takeaway: India's strong breadth, participation improving significantly, and sustaining. Sustaining is the most important word I would say for the Indian markets. US markets breadth not supportive of the rise. Wait and watch. That is what I would do. Dollar yields continue to rise. Moving yields won't be a bad idea. Uh, e- Even I have not moved as yet, but then if I see the breadth continues to remain weak, for sure, maybe next 10-15 sessions I'll plan to move my new positions into yields. Bitcoin, gold remain weak, suggesting its risk appetite is still subdued. VIX around 17, indicating no signs of panic. Yeah, so that's everything from my side. I hope you all found this useful. That is what I would suggest. If at all you are trading Indian markets, go all in there. If you are trading US markets, see, there are pockets of strengths, I wouldn't deny that, but then be very cautious. Whatever your bet size is, don't get in all in. I mean, try to smaller your bets. Keep testing the waters and see where do you find yourself. That's everything for today. Hope you all found this useful. Thank you so much and have a good one. See you next time.